Welcome to TradeTheMBI.com. This is John. This report is for the 4th of October. Well, we started with, the fireworks here from the other day. Big up move. Not surprising. This is the market response to what happened with the Bank of England, where, they had been talking as aggressive as Powell about, tightening and, keeping rates up to fight inflation. And they caved as soon as they saw their bond market and related credit situation deteriorating rather quickly and went to quantitative easing almost immediately. The expectation is the Fed will have to do the same, which is what the market was buying, the rumor versus the actual. Not to mention, we had reached that pretty extreme level. And it's interesting, though, that even with this climb, uh, barely getting much movement from long-term buyers. Has been mostly midterm and short-term buyers. That's the green DOC and the steel. Um, Kind of getting excessive levels. We're reaching that 23%, but we've got the tip of orange, so that's congruent with it. And red now has moved below magenta, and we also see the fade on the MBI white. So all things are looking good from a bull standpoint. Sustainability of it is going to be determined whether or not that magenta keeps rising, and it's going to need to, because any fade of that back down below that 25 is definitely going to be the pullback. And so I think we're going to be watching this 23% level, which currently sits at 37.54. And that will kind of be pivotal. And a lot of this is going to be what we're going to see coming forward in the market. There's going to be a lot of swings, and they're going to be based on mostly just either rumor news kind of situations, simply because the underlying data is pretty clear. So any spark that can be counter to the general trend, which has been lower, certainly is going to create some excitement. Not to mention just the idea of forcing some short cover. You get these big moves. I mean, look, we're already up pretty significantly, 47 on the ES, 190 here on the NQ, just in pre-market. And that's some of that exuberance that they think that the forced hand of softening the hardline position is sort of guaranteed, regardless of the energy situation. Of course, the euro bouncing on this because, of course, the euro is going to be recovering simply because the dollar is going to fade. That's the logic there, not because anything's working out in the Eurozone. Still subpar, but staving off a complete collapse, because below that 95, once we get down to that 93 range, which I would expect that still has the potential of getting there, turnaround move once this exuberance fades, you got a real problem, because then really gets difficult to understand what the impetus for holding a euro would be, other than if you're in the Eurozone. From a treasury standpoint, we got to that 100 marker on TLT, which was a reflection of the rate rise, and we've seen a little bit of pop up again. This is that expectation that maybe the Fed is going to soften, but the bond market isn't completely sold like the overall market seems to be. That quantitative easing is literally around the corner. From a gold standpoint, well, yeah, we knew that this was going to start lighting up, because there's going to be any way to contain the fact that if they move back towards quantitative easing, inflation is just not even a factor that's going to be contained, and it's just going to skyrocket. And that devaluation is forcing some hands to have a significant gold position. And so we expected that turnaround, and definitely taking place already. You can see the green had already flipped, and oil also is going to be reflected. I think in oil becomes even. Obviously, we're at a little bit of a irrational price simply because of the distortion of the market at this particular stage. But it's also a great indicator from an inflationary standpoint, because as economies improve and things like that, usually oil gets a spark because of demand, and that gives you an idea of the strength of things. Now you've got, even though the OPEC is going to be cutting back, because they like prices where they are, because they make tons and tons of money. Bitcoin, not experiencing the exact same rally setup, but I think that it's going to become that secondary lookout for when things maybe this winter start to get a little bit more difficult is going to be the prime impetus for people to be shifting to when they see a lot of problems in currencies. I don't think that what you saw from the Bank of England is going to be isolated. It's going to take place in a variety of different areas, and particularly as a lot of the central governments are going to be forced, at least in EU, is going to have to at some point make huge subsidies to afford energy, assuming they can even get it. See, that becomes the real issue. It's like you can talk about supporting it, but if you can't physically get it, with Nord Stream 1 and 2 gone, um, there aren't enough tankers out there to transport LNG to make up the need. So we can see already that big buyers of coal are starting to take place. I know the Germans were in South Africa. A lot of different areas are taking place that are really trying to really make bad energy, or at least not so clean energy, as their primary source to make up for the shortfalls, which is interesting given that most of this is driven by green initiatives anyway. So who knows? 50K chart. So we can see the turnaround took place. We had the red leading, and then magenta finally caught up and took the lead. And once it had it, didn't let go. There was a brief point right here where it could have shifted, but then pivoted right back up. And that has led to the latest press, and it continues to ride higher. From an intraday standpoint, it's a little more interesting because we had some nice moves to the downside. Buy signals that came through produced some really excellent runs, both up and down throughout the day. And I thought it was quite lively. And that's kind of what you look for from the normal market behaviors, which I thought was very interesting to see. We had the good runs. Weaknesses were very minor simply because we had such elevated DOC red, and you can see DOC red even here popping above the 7.5. That's unusual, and it's really indicative of strong buying taking place throughout there. And then when it did soften, again, filling back positive extremes. So as they came, they still got filled back in. And a little bit later on, we ended up catching this very nice green run that took us all the way just before last hour plus, and that's when the sell came in and they filled back positive extremes. They were going back to this range, just a little shy of those, but the middle ones definitely got filled all in the upper zone of it. Particularly right there was the bottom side of it. So there's just a couple that are left from just fractionally below at the 3678 range. So keep that in mind. Should any panic take away from this exuberance that you're seeing right there, and it's just the end all. And of course, that ignores the Credit Suisse debacle for what was taking place there. And you're going to get a lot of this. You're going to see a lot more of these little weakness signs, credit situations, and they're going to try and fill in the holes. The question will be when it becomes Lehman compounded, and that's what I think a lot of what you'll hear from. You can call them naysayers or whatever, but I think they're a little early in that situation. But when it does start, it could be quite significant. So it is definitely uh, something worth paying attention to. I think that trying to put in long trade situations at this particular stage is fraught with all sorts of problems, both short and long, because I think the market's going to be a lot more dynamic than that going through the month. So keep that one in mind. And as always, you can look for me on the Skype chat. Trade well, post relevant details as they pop up. Have a good one.